Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you this week. Dan Held from Taproot Wizards, Trust Machines, and now Asymmetrics Bitcoin DeFi Venture Fund is our guest. We'll talk with Dan at length about DeFi on Bitcoin, Bitcoin L2s, interesting stuff that Dan is seeing. He's a repeat guest. And, of course, we'll check in with our good friend Binmet Abibi from Galaxy Trading, as always, to talk about markets. Big day, Fed day. Before we get to that, I need to remind you to please refer to a link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our friend Binmet Abibi from Galaxy Trading. As always, Binmet, welcome to Galaxy Brains.
Thanks for having me.
Big day today, Fed day.
Almost a Super Bowl.
Well, it did. They came out and they cut rates by 50 basis points.
Yep.
It seemed like markets were ultimately pricing right around there. But still, even I'm actually in Asia right now, but waking up to see the headlines seems like there was surprise.
No, there was a little bit of surprise for sure. But I think high level, what the main thing you got to take away from this is that the easing cycle has begun, right? This is the first time we're cutting rates since, basically COVID. And we started with a cut that was about, it was significant enough to like actually matter with 50 basis points. It was a small surprise to the market in the sense that, you only had 40 basis points priced in going in. And so, there was some chance that folks were thinking 25. Besides that, I do think it was the appropriate decision. We've seen the labor market start to show signs of cooling. Inflation has calmed down materially. The employment side of the mandate is important to focus on at the moment. And so, when you're already at 525 to 550 and you're seeing the data head in this direction, it's entirely appropriate to cut rates by 50 basis points. There's a couple of things that I thought were notable. One, you did have a dissent for the first time in a while by Fed member Bowman, who wanted 25 basis points. Secondly, they changed their unemployment forecast for the end of 2025 in terms of the unemployment rate to 4.4%, which is an uptick from here. But it does show that that is kind of what they're thinking in terms of where the labor market is headed. We're probably going to slow down, but there was plenty in the presser that kind of acknowledged the fact that the economy is still in a half decent shape. Right, growth figures are pretty reasonable. If you look at Atlanta GDP now forecast for Q3 GDP, that's almost close to 3% on an annualized basis. If you look at kind of other metrics that kind of measure economic activity, nothing's like really falling off a cliff. And so Powell was definitely kind of cognizant of the fact that stuff's still fine. Basically, the path to a soft landing is still there, and so I do think that the market was caught a little bit by surprise in the sense that you did see fixed income sell off, particularly stuff a little bit further out the curve. And that's just largely a function of like cutting 50 basis points now doesn't mean that they're going to go by 50 bips increments on a go forward. In fact, in the dot plot, it suggests that they're going to go another 25 and then another 25 meetings, 25 bips in the last meeting of the year to get to, cumulatively 100 basis points cut by the December meeting. And so I think that's, probably the appropriate stance of monetary policy. The market reaction, though, was very volatile. You had stocks rip higher, up S&P up 1%, and then it's finishing the day down like 35 basis points at the moment. Gold hit fresh all-time highs. Then it's going to finish down on the day. Bitcoin 61K and change, and now you're kind of hovering right around 60K. Is kind of what it seems like, and so the price reaction was volatile, but again, it was expected to be volatile. Um, yeah, I'll
Yeah,
pause there.
yeah. It's we're finally in a new regime from a rate standpoint, which I think is the most interesting part. You've been among the most clear thinkers that I've heard over the last year, explaining that rate cuts does not automatically mean bullishness for risk assets. That if rate cuts are necessary, it means possibly weakness in the broader economy, which is bearish, right? I mean, it's bad if the economy is not doing well. Do you think that it was justified at 50 bips? Does it not seem, you said it was, but um, is the fear about a recession warranting such a 50 bips cut, not a steady 25?
Well, so I mean, the way I would think about it is, he did the 50 bip cut, but he also guided, they guided via the dot plot that they're going to go in smaller increments. And so, and he signaled a willingness to basically adjust policy based on the data. And, if
Yeah.
they need to move less frequently or by smaller magnitude, he signaled that he was willing to do that. And so I do think that this struck the right kind of balanced tone where this wasn't like a panic 50 basis point cut. It was more like, given the employment data they had since the July meeting, it seemed like they should have probably started cutting in the July meeting. 25 bips and then another 25 bips for the September meeting. And so it kind of seemed like they were just catching up to kind of where the data was.
Yeah.
Not necessarily kind of being like, on a go forward basis, stuff's going to be so bad that we got to cut 50. And so that's kind of how it was framed. And it kind of made me, less concerned that the Fed was going to, kind of incite that type of panic reaction by cutting 50 because of the set of
Yeah.
circumstances around it. But high level, you're right in the sense that I do think that if we are going down a recessionary path or a hard landing path, more if that's more likely than a soft landing path, I think equities are very mispriced. To give you guys some context, I think earnings growth for the Magnificent Seven in 2025 is expected to be like 14%. And for the rest of the 493 stocks in the S&P 500 is expected to be around 9%. And so that's a lot of growth to have uh, in an economy that might be slowing down a lot. And so I just think that there's a little bit of a disconnect between, the Fed cutting rates because stuff's softening and kind of where forward earnings growth is expected to be. And so that's what I'm cognizant of right now, particularly because, you had the S&P at an all-time high yesterday,
Right.
right? And so your risk reward for holding these risk assets isn't, it didn't seem that attractive. But I will caveat that with saying that generally when you ease monetary policy and you ease financial conditions, that's broadly supportive of risk, from the simple standpoint that cash ultimately has lesser value,
Yep.
right? And so, but right now, I mean, the cash rates are still juicy, right? It's still very compelling. But it can't be said enough that if the Fed did cut by like 400 basis points, like that would probably be very,
Yeah.
risk
That's
positive.
fair.
And so it's all else equal.
All right. Lastly, on this topic and in general, what about the balance sheet, the Fed balance sheet? I mean, they're cutting the overnight rate here, the minimum rate, the Fed
Yeah.
funds rate, but is there any hint of any further, Fed action on their balance sheet side?
Nothing concrete. Basically, they stuck with the policy stance that uh, continued balance sheet normalization while lowering interest rates is kind of consistent policy because on one end they're just kind of managing the balance sheet of the Fed to kind of get to more normal. I mean, it kind of like just backing up, like the Fed balance sheet is so big that if they do like even like you know go back to like $100 billion a month in runoff, like it's still not doing a whole lot from the standpoint that, there's still a ton of like net dollars outside of, not net, but there's a lot of dollars that offset that balance sheet runoff, right? The Fed pays out 5% and change on all of the excess reserves in the banking system, right? That's a ton of money that's flowing back into the economy, and things like that. And so, just because they're reducing they've gotten the pace of runoff to a reasonable level and they're continuing it, doesn't mean that it's really doing that much impact. And so it's at a place where I think the impact is relatively benign, but from a policy consistency standpoint, there are a lot of market participants that are like, you're cutting rates, but you're still running off the balance sheet. That seems inconsistent. And what the Fed is trying to do is trying to communicate the fact that it is consistent policy, because you're just normalizing things to healthy levels, both in interest rates and in balance sheet policy.
All right, my friend, Bimnet Abibi from Galaxy Trading, as always, thank you so much.
Thanks for having me.
Let's go now to our guest, Dan Held, general partner at Asymmetrics Bitcoin DeFi Venture Fund. Dan, welcome back to Galaxy Brains.
Thanks. Loving being back in New York.
Yeah, it's your second appearance. There's not many people who've been on the show multiple times. I think it's, other than like internal, Tyler Williams, our head of policy, who comes on a fairly large amount. It's like Nick Carter, basically, I think, is like the only real repeat guest.
Well, I feel honored.
Well, both you and Nick possess a Taproot Wizard honorific.
That's true,
on your Twitter.
Honorary Taproot Wizard. That's right. Yeah. So for those who aren't familiar, the Taproot Wizards are an NFT collection on Bitcoin, and there were honoraries created that were one-of-ones for folks who were prominent in the industry, and Nick and I both got one. By the way, the process behind that's pretty funny.
Yeah.
And I don't think the guys...
Because I think some of the other ones that I'm aware of, Jameson Lopp has one.
Yep.
Arthur Hayes.
Arthur Hayes one was great.
It's phenomenal.
The coconut was brilliant.
Yeah.
And he likes to snowboard.
Yeah.
Did you see the Casey Rodomore one?
What is Casey? No, I don't think I did. What is that? What is his?
I presented it on stage to him at Bitcoin Nashville.
I mean, I was there. I just don't remember.
It's fucking crazy looking. I mean, it's got flair.
It's cool.
Yeah, it's got a lot.
It's cool. Dennis Porteau has one because
Yep.
he was the original, one of the probably earliest op return users, right? Posting arbitrary data to Bitcoin.
Yeah. So the honoraries, I think people like the process. The team actually designs that all together. Now, Farah Francisco, the designer, is the one who designs it, but there is like an interesting feedback process where we want to subtly troll folks. I didn't do the ones before I came on board, but then after they made my honorary, I started talking to Udi and Eric and felt there was a good fit there on the marketing side. So that's been a lot of fun working with them over the last year and a half.
Yep.
They're a blast to work with, super creative, a really fun brand.
Totally.
But yeah, I have been involved with a few of the honoraries, and it's a funny process where it's like a lot of feedback, and you're like, what are these little pieces of someone's personality that you can incorporate into an image, which I think makes them extra special. There's also, if you notice, the later ones have a little bit more kind of not tangibility, but almost tactile imagery. Like the beards almost look textured.
Yeah, they do.
I think that's what I'm trying to say.
They do, yeah.
Which we kind of lament. We're like, man, the best honoraries are going to the ones who get them at the end, because they're like,
Right, they get better as you go.
They get better as you go. Yeah.
We'll talk more. Well, I guess we may as well just keep talking Taproot Wizards, because I want to talk about Taproot Wizards, but
Sure.
we've got plenty to talk with you about. But since we've started here, we have it's not just an NFT collection. There's now a couple where they have the Quantum Cats too, which is actually quite interesting from a development standpoint, in my opinion.
Jimmy
Yeah,
Is
GM
GM still a thing?
I don't know. Not really. Yeah, it is.
WAGMI is definitely not a thing.
Definitely not.
Definitely not a thing.
I think Mark
GM
Zuckerberg's sister killed that one, right, with that song.
Yeah, Randy. Yeah,
Yeah.
that was a little
That
cringe.
song was rough.
There was like that, and all the brands like Coca-Cola and Pepsi like talking to each other.
Did you just post that recently?
I posted
I was going to say, I saw that. Yeah, when they're like, welcome, friend, and it's like, wag me. Oh, God, that might be the most cringe screenshot I've ever seen. This is on Twitter that we're talking
Send
about.
it to zero. I think that was the...
That's like Top Signal type
it's
stuff.
definitely Top Signal.
Yeah.
Yeah, so the Taproot Wizards is the company, and they created the Taproot Wizard collection and Quantum Cats. Quantum Cats represent, I think, the culture and the ethos behind upgrading Bitcoin with an OpCat, or some people pronounce it OP-Cat, upgrade, which is a soft fork proposal to Bitcoin. And so I think that it's interesting, because I've never heard of to the best of our knowledge, we've never seen another NFT collection that was associated with like an EIP or a,
No,
you know,
I'm not aware of one. Yeah,
yeah, which is really cool mimetically.
it is.
And I think Udi and Eric are masters of mimetic narratives. They really know how to troll people really well on social, but also packing in memes into that message helps propagate that message. So OpCat and the Quantum Cat collection was meant to promote that software proposal, which we fucking memed that from nothing into something. And again, I say we, I was partially involved, but you know, Udi and Eric, of course, really doing the heavy lifting. And the rest of the team too. We got a phenomenal team over there. You know, Alex joined.
Yeah,
as well.
Rindell's great.
Rindell's
Yep.
awesome. That, yeah, we they've
You got Ben now too from Mutiny.
Ben Carmen. Yeah, I know.
He's a good dev.
Yeah,
good dev.
the squad is really good. I'm the only marketing guy, but Udi and Eric are basically marketers. They're you know they're really sharp and they know social better than anyone else.
Right.
You know, so yeah. So when I say we, the idea behind Quantum Cats was to promote OpCat, which will allow for trustless bridging to Bitcoin L2s. Now people go, well, why is that important? In the block size wars, the outcome of that was that we all agreed as the Bitcoin community that Bitcoin would scale in layers. So that then pushed people to build layer 2 technologies. Liquid, Rootstock, Lightning, Stacks, those are some of the earliest ones with varying levels of usage and adoption. And we've sort of hindered them in a way because we're pushing all this economic activity to an L2, except there's not trustless bridging. And trustless bridging, you know, taking your Bitcoin from L1 and bringing it to that L2, it's dangerous right now. You know, you've got semi-decentralized solutions like TBTC, which that's called Threshold BTC. So that's basically a federated model. You've got completely centralized ones like WBTC, which there's now a relationship with WBTC and Justin's son.
You don't usually like to hear that, you know?
It just doesn't put a good spin on things.
Yeah.
And I think that also kind of highlights this issue of these weak bridges, or these, you know, having to wrap Bitcoin and bring it to an L2, doing that in a way that isn't as game theoretic secure as we'd like. OpCat allows for things like that and other things. And so which we all agreed as a community, this is how we're going to scale, but we left these bridges intentionally weak without these updates to Bitcoin. So with these updates, we allow for very strong trustless bridging, which I think fulfills the social agreement that we all made, which is that if we're going to push people to L2s as Bitcoin L1 becomes congested and has higher fees, which is a good thing, this isn't a bad thing, that these would be, you know, equivalent game theoretic security wise.
Yeah, and it's not just the scaling, it's the feature set, right? I mean, the idea is that there's also things people want to do with their Bitcoin, but that perhaps we don't want done on the L1. Right. And so you can maybe with these I was going to say the thing with the Lightning too, which has quite secure. It's not really bridging though, right? Because Lightning channels are actually just 2 of 2 multi-sigs. Like they're secure,
right?
But that's not. There's no state there. There's no virtual machine. You can't.
Yeah, I mean,
Lightning's a little bit of a different type of L2 in that sense, so it doesn't really qualify here either. Like it's not like that's the solution, right? Like
Lightning is great. You know, I think a lot of people, I think Udi and Eric and others shit on Lightning a little too much. Where like Lightning is good, but it's not a catch-all. Yeah, and I think a lot of the hardcore Puritan Bitcoiner types, the very conservative types, are being very intellectually dishonest by saying Lightning solves all these things. It does not.
Yeah.
It's cool. It's great. I like it.
Yeah.
But let all the flowers bloom. Let's see what the L2
right. And OpCat, which is like concatenate, right, is where it comes from. And I had Rindell urge people to watch the episode with Rindell. He goes much more in depth into the technology behind OpCat. So
Rindell's far smarter than I am.
Yeah, me too. I'm not going to strain myself to try to explain exactly. But it allows for building up multiple pieces of data and then being able to refer back to them, creating tables of the data, which just is very powerful, let's say. But it was also created by Satoshi.
Yeah,
right? This is a deactivated opcode, basically.
That's right. OpCat was originally created by Satoshi, and Satoshi deactivated because I don't think he had time to really fully explore it.
Yeah, there was worries. I think the story is that because you can concatenate, you can think about like a Stack Overflow type of error where concatenates forever. But as Rindell, I think, explained on this show, it's completely solvable. It's literally you can just put in a thing that says you can't concatenate more than X amount, and then and then you're good. But I think it was, and he wanted to focus on other things, and it was it's actually such a powerful opcode. It's such a generalized, simple opcode. So many different things can be built on it. I think that would be my guess as to why he deactivated it. Was I don't know where this would take Bitcoin, so why don't we focus on
You know,
basics.
people forget that Satoshi isn't a god, right?
Right.
Like he did a lot of things right, and I think it's incredible. And I've written, of course, I wrote up Planting Bitcoin series
Yeah.
on Bitcoin's origin story. So there's no one more. I mean, there's few other people more than myself are more enamored by Satoshi as well.
Right.
Like what he did, his invention, how he accomplished it. But you know, of course, some things weren't perfect, right? Like,
Right.
how could he have guessed what issuance schedule would have been appropriate? Like,
Yeah,
that
I
was
mean,
a
it's-
total guess.
Right.
know.
It was just elegant math. As far as we can tell, there's
Like, why 4 years?
Yeah,
versus two.
it's not
Who
clear.
knows?
It's pretty arbitrary.
I think that was completely arbitrary, and he never even He never talks about why.
I don't think he does ever. I've
Yeah.
looked at some point or another. I've read every single thing that he's definitely written that we know is either from his Bitcoin Talk account or whatever.
I feel like we'd have to ask Pete Rizzo, the ultimate
Yeah.
Bitcoin historian.
We should.
He has really kind of owned that narrative really well. It's like
He's done a good job with that, hasn't he, Pete?
yeah.
That's a good follow
I
too.
love Pete. He's a great guy.
Yeah, he's obviously he's been he was an editor at CoinDesk and for years. Now he's the editor of Bitcoin Magazine.
Yep.
Anyway, so on OpCat, so that's the other thing. Reindel and the team are also working on other Bitcoin technologies, right? It's not clear.
Yeah.
I don't think you guys have publicly announced exactly
Yeah.
what other than the NFT collections that you've released hasn't, but certainly advocating for OpCat
Right.
is something that they've done. The team has done, and it really has picked up a lot. I mean, now the sort of true Bitcoin core development intelligentsia is talking a fairly large amount about OpCat, right?
mean,
And
it's-
doing a lot of hardcore technological research.
It was very underexplored, I think, until we memed it into existence.
Yeah.
And that's where when Udi and Eric first came together with the strategy behind this, I thought they were a little crazy. I'm like, we're going to use memes and NFTs to promote Bitcoin development culture. I'm like, that's pretty wild.
I'm
but
open
let's-
to the concept,
Yeah,
but it's right on its face. It sounds weird.
Yeah, it sounds weird, but it worked out brilliantly. I think, when you create like really mimetic type narratives that are just so easy for people to grok and talk about.
It's a cat.
It's a cat. It's kind of cute, weird looking. We also have, there's a children's book.
Yeah, no,
Do-
I know. It was
Yeah.
good. It's good.
So we've done some things that are pretty funny in that regard. Also, did you check out you went to Bitcoin Nashville, right?
Mm-hmm. Yeah.
Did you see the hat?
I did.
Yeah.
Massive wizard hat, basically directly next to the Bitcoin Magazine, news desk.
That, and we wanted to put it really close to the Bitcoin Puritans art. Because for those who don't know, the Bitcoin Puritans hate the idea of selling digital art. They consider that a scam. They like to sell physical art, which is pure, I
And
guess.
that's fine.
And that's fine. That's cool. I like
Yeah.
physical art too. But we wanted to remind them of Taproot Wizards.
Yeah.
And so it also ended up being like one of the largest objects in the room.
It was massive, and it was mentioned in basically every mainstream media story about the conference. And I think it was
Trump posted on Instagram.
Yeah, I was going to say the
That was
photos
crazy,
were
yeah.
posted. Yeah, it was quite funny. All right. We can talk more about the Wizards. I can't wait to see what else they do. It is very fun. I would say it's fun. I mean, it's just fun. And
We're making Bitcoin
and,
magical
and,
again.
and that's the thing that is so you are, and I think that's what is so what's one of the most redeeming things about it. If you're like critical of the Taproot Wizards or you hate selling NFTs, is also a very very strong tech team, right? I mean,
the tech-
Reindel is like Cash App. Like these
Ryan
are
Dill,
real. These
Eric
are
Wall.
real people.
I mean, Udi's bald. But, the team is exceptional. Tyler Whittle.
Yeah.
Everyone I've worked with there, and the team's been growing quite a bit.
Yeah.
Everyone's really sharp.
It's cool to see, and it's part of this whole, since ordinals, this whole renaissance. Maybe this is what we should
Sure.
talk
Bitcoin
about.
Season 2 Renaissance.
Yeah, because I introduced you as the GP of the Asymmetric Bitcoin DeFi Venture Fund.
That's right. That's what
That's
I
not
focus on.
something that that's not a title that I've used for you before. What
yeah.
are you doing? What is this new venture fund?
Being in the space almost 12 years now, I've held a lot of different titles, but I've never been on the VC side. I've always been an operator, and for folks who don't know what that means, an operator means someone who goes and builds something. So working at a startup or working at a big company.
You've been an entrepreneur. You've
Twice.
been acquired
twice.
You've worked at big companies and small companies, right? You've worked as an advisor to companies.
I failed too. Bitcoin and crypto is a harsh mistress. It's it's a lot. And some of those were kind of by the skin of my teeth sort of maneuvers.
I still reference your usage of the OTC lending desks and how you'd put coin on all of them and then publish that information.
Oh, yeah.
I still talk about this because there still is major opacity, and there always has been among the OTC lending market.
Can we talk about what you're doing?
Yeah, sure.
Okay, yeah.
Along the same lines, we are writing a report about this because there is still this
I
opacity.
mean, this was the dream I had, is that someone would write it up.
Yeah,
You
I know,
like, 'cause
and
I was
it's
just pulling
hard
up for myself.
Well, one of the things that was so interesting about what Dan would do is you would put your own. This is talking about your own Bitcoin. And you'd say like, you'd do what I think we call like an earn product, right? You'd lend them and see, and then you'd publish what the rates are, right? That you're getting back from all the. None of those companies, including us, like publicly say what the current lending rate is for Bitcoin. And what's interesting now, we can go in DeFi pretty easily and see like what the rates are on Aave or on whatever for Bitcoin and stuff. But again, like, and there's a large amount of Bitcoin lending happening in DeFi, but there's a large amount happening over the counter, probably still the largest amount, and definitely before with like Genesis and Voyager and BlockFi and all those companies, right?
Well, what's interesting too is with the spreadsheet, I would put my own coins there.
Yeah.
I felt that was the only ethical way to do it.
Right.
You know what's funny is I didn't lose money on any of the ones that were consumer facing. I never put any money in Celsius. That was obviously a scam.
Yeah.
Like from day one. BlockFi pulled my money out a year and a half before when they accidentally sent that person $10 million.
Yeah.
I was like, this sounds shady, and I tweeted that out. So I actually got caught at Genesis.
Yeah.
And I thought that was going to be the last one. They were the legends.
They
been
were
operating
legends.
for-
There was a quarter where they had a loan book of $14.7 billion. Now, granted, that's what they said, but like that. I mean, when we publish this report that should be in the next month or so, we're going to show that the fall off primarily from them going bankrupt is absolutely insane.
Well, they were so huge.
Yeah.
And I mean, what happened there was, I would say, like criminal negligence.
Yeah.
Like, I think everyone who was involved with that over on the Genesis side reflects incredibly poorly on their character and their execution. We're talking egregious breaches of trust, things that they're being sued for. I don't understand how someone could ethically be involved with that and still be there.
Yeah.
So shame on whoever worked there. Is pretty fucking bad.
Yeah.
I mean,
that's a big black mark on the industry. They were
huge
behind
black mark in the industry.
Basically all of the big blowups, actually.
Yes,
FTX,
they were the
Three
center
Arrows
of it all.
Capital. Yeah.
Yeah, as the counterparty that's failing.
Right.
And then, the maneuvers in bankruptcy were really disgusting as well. Where they
This I didn't follow very closely, but I don't know.
So I have recovered 55%. I didn't lose that much there, but
but that's
55% recovery, and another 20% will be recovered. And that was in kind.
Yeah.
So it was returned back in BTC. So haircut wise, it'll still sting a bit, but I lent what I thought I was willing to lose, and certainly felt that. So
yeah.
I
There
mean,
you go.
the coins I said I had there were there when it collapsed.
So you're doing venture now. You've teamed up with Asymmetric, which is a pretty big fund. I think they do liquid as well, right? That's Joe McCann and others there.
That's right.
Joe, I think maybe our audience, if you just got to know him recently, it might be because he was one of the biggest Solana ecosystem investors and specifically Bonk, right? He loved Bonk. I don't know if he still does, but
let me
tell me.
let me give you the backstory. So Joe and I met a few years ago through a buddy of ours, Jeff Renault, with Invisible North. And so Joe was immediately someone who, I being as early as I was in Bitcoin, I like to be contrarian. I don't mind being on the wrong side of something for a very long time. For Bitcoin to be popular and cool and being shilled by BlackRock, et cetera, which we'll touch on later.
Yeah.
For me, that's incredible to see. But in the beginning, people thought you were a money launderer, drug dealer. I mean, I go on dates and they're like, "What do you do?" And I'm like, "I work in the Bitcoin space." And they're like, "So do you sell drugs? Like, can I buy some Molly off you?" And you're like, "No." So Joe is that exact same sort of character where he doesn't care about being on the wrong side. He sees things, and like, for example, like he was very early on Solana, where the consensus narrative was like, "Oh, Solana's dead." Joe's piling in, So Joe, both on Solana and Bitcoin DeFi, he is an early buyer of stacks as well. He's willing to be contrarian, which actually very few venture capitalists are. They normally just crowd chase and FOMO into what everyone else is doing. And so that was a really natural fit for my fund, Bitcoin DeFi Venture Fund. I actually shopped it to several different crypto VCs, and with Joe, it was the best fit there due to our personalities just being very aligned with being contrarian. And he was the only crypto VC I pitched who was into Bitcoin DeFi, and this was like the fall of 2023. We eventually papered things up in about January, February. And so since February, we've come storming out of the gates. raised quite a bit of money and already made 6 investments, which, as you know, in venture world, that's not how things happen. Normally, you raise money for a year, year and a half, and then you deploy over 3 years. Bitcoin DeFi, I think that narrative is very hot now. It's something that I've been looking at for a long time. And the fund was the right time, I think, to formalize what I had been doing already, which is cutting angel checks into the space. Formalize that. And so timing-wise, we couldn't have been more perfect. I mean, we've gotten in right at the right time, right valuations. It's been fun being a venture capitalist. It's a different thing for me to do. It's a lot, it's a lot of now looking at the mirror of who I used to be as a startup founder and looking at founders and seeing, do they have the grit, intensity, and intelligence to go execute? We invest in early stage, so you often don't have much to go by, like traction-wise. Like they don't have 5 years worth of execution with this product. They might just be starting. So really finding out if that founder's got what it takes. Are they solving a problem that we think in the market is a unique fit? And so, to name off a couple, Bob, Mezzo, BitLayer, those are Bitcoin L2s. Those all raised rounds, 3x the rounds that we got in just a few months later because of how hot the sector was. Fractal, that's one that a lot of people passed up on. Have you heard of Fractal?
No.
It's a meta protocol by Unisat.
Oh, interesting.
Yeah, so the Unisat team is building this. Bob Bodley does really good content in the space. Do you ever read his stuff?
Yep.
He's got a good write-up on exactly what it is, but Fractal is a meta protocol. We think that space is very underexplored. Bitcoin L2s, of course, are hot.
Yep.
Quite a few of them out there.
Right.
I forget the latest count.
I mean, I've said it is the latest count. I'm not sure. We've done plenty of research on this, and I don't know, we pegged it at like 65 a few months ago. But Mike Dudas claimed that he's seen pitch decks for over 150. So I don't know if that's
maybe.
true, but in any case, it's a lot.
It's a lot. Yeah. L2 wise, I don't think there's going to be a winner take all. There's going to be a spectrum of outcomes. Look at Ethereum L2 landscape.
Right.
I do think we're going to see a Bitcoin L2 at $100 billion valuation, though. Like if Bitcoin's trading at a $4 trillion market cap, $100 billion L2 is actually quite small if you think about it. So I think we're going to see a lot of activity there, especially as transaction fees on L1 rises. That pushes activity to L2s. And if L2s get OPCAT, that would be hugely beneficial. We're equally bullish on meta protocols. So meta protocols, for those who don't know, are not a layer. It's not an L1. It's not an L2. It's like you and I are wearing augmented reality glasses, looking at the Bitcoin blockchain and sharing the same software. That software that we run would be like the meta protocol software.
So ordinals are a meta protocol.
They're a meta protocol.
Right.
Yeah, and ordinals, you've got ordering theory. That's where ordinals comes from, because you and I collectively hallucinate and agree that these Satoshis are ordered in a certain fashion.
As long as we run that software that looks at it that way, then we can do stuff with that.
Exactly. And then you've got protocol standards like BRC20, Atomicals, Runes. I think there's going to be far more exploration there, and that's what Fractal is.
Very interesting.
Yeah, because what's cool is any UTXO on Bitcoin can interact with a meta protocol.
Yeah, I mean, this is what Ryan Dell is always explaining to me about ordinals, and Casey also, that it's important to Casey. One of the main things was that, like, because these are just UTXOs, they're not fundamentally changing, that they can make use of literally every software, every transaction type, every wallet, right?
Yeah, because you and I are sharing the same collective hallucination or software or protocol. The Bitcoin protocol didn't change.
Right.
We just interpreted movements on the Bitcoin protocol in our own way.
Right. One of the biggest wallets, the most popular wallets that like real ordinals, aggressive power users like to use is Sparrow, because it has really great like UTXO selection and labeling and stuff. Absolutely not made for ordinals.
No, I mean Xverse, Unisat.
Yeah, those are made for it. Yeah, but one of the and Sparrow is a power like user type of software.
Yeah.
But like again, like just it's same thing. Like it's just a really good Bitcoin wallet. It's not like for ordinals.
Yeah.
Obviously, yes, the Xverse team, Unisat, you mentioned, like there's and others. I think Hero or something. I forget all the ordinals.
Hero is now leather.
Got it. So like there are ones that are built that actually are more usable for normal people. That know the meta protocol.
Yeah, Sparrow's a little advanced, I think.
Yeah, but in any case, point being is it's just Bitcoin.
Any wallet. Like you could use a Sparrow wallet not optimized for that to go interact with any.
Exactly.
Yeah. So we think that's vastly underexplored. Now, as transaction fees rise, anything that you move on the Bitcoin base layer is going to be expensive.
Fair point. Yeah.
So we think there's
including ordinals or other meta protocol stuff. Yeah.
Yeah, and this will equilibrate over time. Bitcoin transaction fees will hit a certain level, and that will some economic activity on Bitcoin L1 with Meta protocols will cease because it's not profitable or worthwhile, whereas that'll be pushed up to like an L2. People could maybe wrap those assets and bring them to the Bitcoin L2. There's all sorts of ways you can do it, but yeah, we see a world where both flourish. And Meta protocols are something very distinctly new and different. Those don't exist on Ethereum, and they have existed before. We had what was it called? Counterparty.
Yep,
That's
counterparty.
technically a Meta protocol.
Yep.
So yeah, some of these have existed before, but I think it's a pretty new narrative, and it's going to be a hot narrative this cycle. Same with the Bitcoin L2s, but that's a given. Everyone's already talking about that. For me, I like the unexplored paths.
Very interesting.
And then, but cool, we're building all this infrastructure.
Right.
How about the dApps?
Yeah,
Right?
great.
And I've seen the hand-wringing over in the Ethereum landscape complaining about that.
In fact, I just last week released a podcast episode where I just ranted the entire time, and
about infra. Too much
and
infra.
one of the main things I was like, where are the applications, right? In fact, all the big application categories from 2021, NFTs,
Yeah.
metaverse, DeFi, gaming, other than DeFi, which is strong, it's almost a commoditized utility. It's important, but it's not really growing, or like innovation has mostly stalled right now in the broader Ethereum sort of world. The other ones are practically dead. So anyway, yes, I'm also one of these people who is calling. I'm yet again asking for your
Give us the
application
dApps.
developments. Yeah.
Yeah. We did back 2 dApp founders, Liquidium, which allows you to borrow Bitcoin using your ordinal as collateral.
Interesting.
It's really simple how it works. So it uses discrete log contracts, and NFTs are illiquid. We know that NFTs are not the market for that. Like, there's not really a bid. You
Right.
know, it's more of like you sell below the floor and someone might buy it. The markets are rather, and then you look at the daily volume, it's pretty small.
Makes it not great for like liquid collateral,
Right.
loan collateral.
Which is interesting because what they basically created, Liquidium created, is it's like you're selling a put. So for the lender, it's like selling a put. So basically, the ordinal, so you get an NFT ordinal, and someone you basically sign it into a discrete log contract. You all sign, and then Oracle data is piped in, which is the pricing of that NFT. If it goes below a certain value, it doesn't try to sell the NFT. It just reassigns ownership to the lender, which is very elegant.
Kind of seizes it.
Yeah, they just seize it.
Yeah.
Which is really elegant and simple, because you don't need any sort of liquidity or any sort of order
And
books.
so the lender can decide what to do with it.
Exactly.
Yeah.
Yeah. And I mean, the interest rates are crazy.
Right. I mean, it makes sense. Yeah. But
Yeah.
there's a market. I mean, it makes sense. There's
always a
for
market
that.
for something. Yeah. So we thought that was really interesting. Lending, as we've seen in the DeFi world on Ethereum, is huge.
Yeah.
So, and we like Robin and the team. So Liquidium is one that we invested in, and Satflow. Now, I can't talk about Satflow's future plans, but they've got a pretty cool roadmap for what they're doing. Satflow currently is a tool that allows you to snipe transactions in the mempool. That's ultimately the final order book for clearing, right? Is like the mempool is all the pending transactions, and you can snipe those partially signed Bitcoin transactions and replace it with your own.
Interesting.
So that's really cool to see what Satflow's done there. I think if you start from a first principles perspective of like that's where the action happens, then build from there.
It's like MEV basically.
Yeah, it's one of the first MEV MEV visualization tools, because
Yeah.
like non-engineers could use the tool.
That's cool. This is
Yeah.
one of the things that critics of ordinals have raised, is that it starts to introduce MEV to Bitcoin. But
Yes, the dreaded MEV word.
yes,
Yeah.
yes, it's funny that we even call it MEV, because on neither Bitcoin nor ETH is it actually miners doing the value extraction at this point. But
Right now, it's a maximum extractable value.
Yeah,
is what MEV
exactly.
stands for now
Yeah.
versus
do you think that would lead to like more private mempools? You got, what is it, Marathon has their private thing. I forget what it's called. Like a out of band transaction protocol type stuff. Like and because that's effectively what's happened on Ethereum.
the 4 mega wizard.
Yeah, exactly. Right.
Yeah. So
Yeah, ripping the 4 mega, as they like to say. All those guys, Charlie Spear, all the ordinals guys, and Nick Hansen at Luxor, who they mined that.
Yep.
Yeah. Is that A, will that happen? B, if it does, is that bad?
Game theoretically is going to. Ultimately, like, I think that these markets equilibrate, though, right? Like, yeah, you could try to do an out-of-band transaction, but how much will that save you? It might be more of, you might you might do it for this. I think introduces some really interesting like futures sort of markets, which would be cool. Game theoretically, it's going to happen. We can't stop what happens outside of the Bitcoin protocol.
Yeah.
So if the game theory needs to be adjusted because there's some sort of catastrophic game theoretic error, then this would be an issue. But I don't think there is one. Out-of-band payments are going to happen regardless.
And they do happen already, right? I mean,
They've already been happening
anytime
for-
you boost
yeah.
a transaction with a mining pool. I don't know. I say this like everyone's doing it. Not many people are doing it, but even mempool.space offers this, right? Like
Yeah.
it is a thing that can happen. All right. So then in the DeFi, let's talk more about the L2s and the DeFi. So there's a bunch of different. I would say what I've mostly seen is basically of the new like this new L2 renaissance or flood, right? I mean, it's mostly roll-ups, right? And I think this is it's kind of nice actually. You let the Ethereum people like do all this work for years to figure out what
Well,
the good.
that was the original narrative with Bitcoin maximalism was that
yeah.
let's let the other alts do the experimental stuff. And if it works, we'll bring it back to Bitcoin.
Right. And
Which is what we're doing.
That
Yeah.
is what this is, right? I mean,
Totally.
roll-ups after literally, I guess it's been 9 years since Ethereum launched, but, I would say it's a bit like 5 or 6 years of hardcore Ethereum layer 2 iteration. Now it's like pretty clear that the optimistic roll-up is absolutely a powerful one, and people think maybe technologically the ZK roll-up is even better, but
Yeah.
frankly, Arbitrum and Optimism and Base, which are all optimistic roll-ups on ETH, like dominate currently, right?
Yep.
But they need the trustless bridge, I think, is pretty much the primary thing.
Yeah, and then you look under the hood. I spent the last 3 years exploring the Bitcoin, not Bitcoin, the Ethereum and Solana DeFi worlds, Solana Breakpoint, ETH Denver, NFT NYC, and because I wanted to see what was going on there, and maybe we could bring some of that back to Bitcoin, or at least we could learn from it. Under the hood on a lot of this stuff is basically like, oh, it's a multi-sig.
Yeah.
I mean, with every single Bitcoin L2, that's currently the case.
Yeah.
Which we are okay with from an investment perspective. The market has decided that multi-sig or federated or threshold models are legitimate, and people are willing to put their assets on that chain. Polygon, the first Ethereum L2 is a multi-sig.
Yeah.
So we view it as a more go-to-market is really the key here, going to market, getting dApps, TVL users, and then, of course, when OPCAT comes out eventually, replacing that for a trusted
Further
bridge.
decentralizing it and whatnot.
Yeah, but I mean, under BitVM, under a lot of these, there's a multi-sig or some sort of further game theory, So it's been exciting to watch what's going on over there. I haven't been super involved watching the latest and greatest, but
Yeah.
it's been
Well, it's moving quickly. I mean, honestly, like we talk with those teams, right? I think our audience knows this. We've invested in Citria, right, which is a Bitcoin
cool.
roll-up, right?
Yep.
Galaxy has, and I've had Orkin on this show before. Also had Botanics on the show, right, which is the Spider Chain. I actually think this is super
Was that
interesting.
Willem?
Yeah, Willem.
Yeah.
So I had Willem on the show from Botanics, and like the Spider Chain is actually just a totally different design that is not a roll-up, which
It's pretty cool.
is
It's
one of the main things I like about it, just that it is different. I'm not.
Yeah, you stake Bitcoin on Bitcoin L1.
Yeah.
And then that represents staked Bitcoin to protect the game theoretically protect.
Yeah,
the
and it
L2.
becomes like this overlapping web. It's almost like that together sort of you can form a single state that then their EVM
and
can use.
then there's more. The states can sync with each other.
Exactly, right.
It's pretty cool. I mean, that's where the spider concept comes. Like
Exactly.
The spider web, I'm guessing, is
That's
kind of
right.
more where they came from.
That's right.
I like Spider Chain, by the way, versus Botanics.
Yeah, no, it's-
I've told the team this.
I know they should just change the name to Spider Chain, but they're saying that Botanics Labs builds a Spider Chain.
Yeah.
It's like trying to make fetch happen. They're trying to.
Yeah, I was fucking with Willem a little bit, and I'm like, yeah, so it sounds like Botanics sounds like a gardening tool, like a gardening spray. It
does.
Did you spray with some Botanics?
Yeah, it does. It's like botanist, but it's got the X, so there's like chemicals in it.
Exactly. Spider Chain,
yeah.
kind of cool. I've never heard of a spider blockchain.
Yeah.
So
So
not once, yeah.
we were talking about DLCs, right? You were talking about Liquidium. Is that
Yeah,
what it's called?
Liquidium.
They used to be DLCs. We had Tony Kai on the show once talking about
Atomic Finance.
Atomic
those guys are
Finance.
sharp too.
Yep. And DLCs are interesting. They don't require an L2, right? You can do them
Right.
today, but
On
it's
the
not.
Bitcoin base layer.
Yeah, but it's certainly not like an EVM-based, stateful, persistent application the way you have DeFi
No,
and like Ethereum.
no.
In fact, they're peer-to-peer. There's advantages to that, by the way. But is that like, are you thinking that in the I'll call it take 5 years or whatever, are we going to have basically, and pretty much all the rollups are using the EVM,
Yep.
which frankly
Or
makes sense.
Or SVM.
Or the SVM, because you already have the Solana programs or the Ethereum smart contracts.
Yeah, copy paste them.
Super easy, right?
Yeah.
And is that going to be a huge area here, or do you think Bitcoin DeFi can get big with only things like DLCs before that is sort of a thing, or like, how do you think about? Is it you're interested in both of it?
Yeah, I mean, back to kind of our Meta protocol versus L2 DLCs, you could lump in with Meta, not lump in with Meta protocols, but have them in the same category of it's all helping on L1, basically. How will settlement occur, or what sort of is it the Bitcoin base layer or a Bitcoin L2 that posts state back to Bitcoin, or some sort of how does your transaction get settled, basically? And that's usually a function of how expensive it'll be in the trust assumptions. So that's where I keep going back to this word equilibrate, because I think the market will just equalize between people who want to do high value transfers, want a clearance on L1, L2s with weaker game theoretic assumptions, people put less value there, I think. And if we do get trustless bridging, then we'll see a blossoming of activity happen on Bitcoin L2s. But Bitcoin, Meta protocols will still be successful even if trustless bridging occurs, because you can interact with it on the base layer and you have that settlement guarantee on the base layer. But there's some nuances here, of course, too, with like indexing and stuff like that.
Totally.
But, we think, I mentioned the $100 billion valuation for one of these L2s. I think that's conservative, and here's why. Like, that sounds crazy, but when you look at L2s over on Ethereum, people use them because they're faster and cheaper. And they're not more expressive, though. You can already do everything you can do on Ethereum on the L1. You're using the L2 because it's cheaper and faster. Bitcoin doesn't allow a lot of activity on the L1 in terms of expressibility, like AMMs, other smart contracts, et cetera. These L2s have a very strong, compelling reason for you to bridge your asset to that L2, and it's because you can do all these fun things with it. It's this playground of DeFi activity that you can do. I think that's very compelling for people. Now, to speak on my as a devil's advocate for my own statement, why haven't we seen that on Liquid or Rootstock? Right? I think a lot of people have asked that. Liquid and Rootstock, for those who don't know, have been around for 5-6 years now.
Yeah.
I think both had terrible go-to-markets, like absolutely awful marketing. Rootstock is relatively unknown. I don't know what they did with all their money. Literally never hear of them. They never attracted any dApps. If there's no dApps to use, then why would people bridge their Bitcoin over there? The bridging was atrocious, terrible tooling. Liquid, same thing, just never had any dApps that were developed. I think that the builders who are coming in now understand that go-to-market is your key differentiator here. Because as you know, the game theoretic design architecture here is almost all the same. Some are exploring things like BitVM and everything else, but it's all theoretical.
Yeah.
So until then, it'll be federated or multi-sig models. But yeah, I think that's the majority of the reason why we haven't seen much activity happen on Rootstock and Liquid. But I think the new wave of builders are definitely laser focused on it, go to market.
I think your point about the feature delta between a Bitcoin L2 that has a virtual machine versus the Bitcoin L1, and that being a much greater delta feature-wise than the ETH L1 to the ETH L2, which is, I think, it's totally right. And it leads me to this question, and maybe you've partially answered it, but I've wondered, from where does the demand to use these dApps come? Does it come primarily from Bitcoiners who, because there wasn't a Bitcoin ecosystem way to do this stuff, but then there is, let's say they wait for the trustless bridge, or maybe they're fine with the multisig, but now that it's a Bitcoin L2, now they're interested maybe in, borrowing stables off their Bitcoin, for example. Yeah. Or are these Bitcoin L2s now competing for like Ethereum users, right? Or is it, wait a second?
That's a good question.
Why?
That's a really good question. What's the audience?
Yeah, because, and of course, right, I mean, part of the backdrop for this is that you and I both know well that like the Bitcoin, the people at Bitcoin Nashville, I think even with decent moderation to the Puritanism, as you called it, having happened over the last couple of years, still a very like hard money, sound money focused crowd, not super interested in tokens, right? That's perhaps even a euphemism. At least a large portion of the Bitcoin world, right, is going to say these are platforms for shitcoins. Is what they're going to say. Yeah. But what do you think that is? Like existing Bitcoiners versus stealing the Bitcoiners back from Ethereum and the others?
Well, so if you look at some of the audience metrics, only 13% of Bitcoin owners only hold Bitcoin. 87% hold another asset.
Yeah.
So there isn't this mythical Bitcoin maxi massive group. It's quite small compared to other Bitcoin owners. The other Bitcoin owners own Ethereum and Solana, and they've been doing degen stuff over there this whole time.
So it's like they went because they wanted to do that stuff and you couldn't do it on Bitcoin,
Yeah.
so they just did it over there.
Yeah, now, I think some people will be like, well, maybe they just use those for speculation and Bitcoins where they save their money. That could happen too.
Mm-hmm.
But even as someone who's stored my wealth in Bitcoin for over a decade, it'd be nice to borrow dollars using my Bitcoin as collateral in a trustless fashion.
In fact,
Like-
you went around to all the desks and practiced that.
Right, in a centralized way, which sucks, and I
Right.
got burned. And
Right.
But that's why DeFi is interesting. Now, with the caveat of like, you still have protocol risk,
For
which
sure.
I think people underrepresent quite a bit.
Yeah.
But the no counterparty risk is really interesting. So I think that when we look at that as a single DeFi function, every Bitcoiner would want to do that, right? Like,
Yeah.
why wouldn't you want to? I mean, you look at if you hodl for 10 years, you either have to sell it, lend it, or borrow against it if you want to have any sort of liquidity event or utilize that capital for anything. We don't have a time preference of 0. We die. So I've hodled for a long time and I haven't sold any of my Bitcoin, but eventually I'll want to buy something. And
Right.
so yeah, I think like that is a basic primitive. What we call like financial primitive is like a different financial instruments or speculative games. That primitive of borrowing dollars using your Bitcoin as collateral.
That's a very straightforward use case.
Yeah, and I would say every Bitcoin owner would be the audience for that, right?
Yeah.
And then you go down the risk spectrum of like, oh, do I want to take my Bitcoin and put it in a liquidity pool? These are far more, I consider, riskier games with your Bitcoin, but each person's risk is another person's opportunity. So I don't think it's a bad or good thing. It's the market, right? If people want to lend, borrow, stake, I think the staking side of this is very underappreciated too. With we've got Babylon, basically using staked Bitcoin on other chains. None of us, I think, predicted that, but that could be a couple $100 billion demand for Bitcoin. Like,
Yeah, I mean, I think one of the most interesting things for something like Babylon is that it pays Bitcoin denominated yield.
Yeah.
And that's very hard to find, right, in the scheme of things.
Well, and yeah, if you look at how it works, it's quite interesting because these other chains, these other proof of stake chains, having the gas token as the underlying collateral is quite risky.
Right.
So being secured by a pristine piece of collateral, Bitcoin,
Yeah.
a store value gold bar, instead of your own make believe money.
I mean, there are questions. There are absolutely questions with restaking protocols on Ethereum that could they encumber the actual security? I mean, you're effectively rehypothecating the security collateral of the network itself, right? And I've raised this question many times. We've studied this. I'm told it's not specifically exactly like that. The risks aren't as scary sounding as I make it sound, but they're not. There's none of that with Bitcoin for this purpose, and so that is interesting. That it's different.
Yeah, I think. Look, I think it falls very nicely within the store value narrative. A pristine piece of a pristine asset, a pristine piece of collateral that's used as a gold 2.0-esque asset. People want to borrow against it. People want to use it as collateral. People want to use it as proof of stake somewhere else. That's a magnificent use of digital gold.
Yeah.
I think it very much highlights why Bitcoin's valuable and accrues more demand for Bitcoin. So these Puritans should be cheering on a couple $100 billion more in demand, or Bitcoin's not sold because people can borrow dollars against it. I mean, this makes number go up, and I think this has been their fault, like their problem. They look at it as like this is a shitty casino that will detract from the Gold 2.0 narrative. I couldn't be more of a Gold 2.0 narrative guy.
Right.
I mean, I've been championing that for basically since the beginning.
Yeah.
Anti-payments and more digital gold. This is a future where, you've got digital gold bricks where you can either use it as collateral, you can borrow against it, you can stamp things into it, like an NFT, which is very costly to create an NFT on Bitcoin versus Ethereum or Solana. But maybe that's where the fine art or the best types of
I
projects
mean, this
go.
was our thesis 2 months after Ordinals
Yeah.
launched, and that's why I love the term inscribe,
Mm-hmm.
because it does feel like Bitcoin is more of a digital stone tablet, right? It's that permanent. It has that
Exactly.
level of fidelity.
Yeah, so I think these are all very complementary. Also, the Puritans, I think, had a very wrongly construed and one that actively ignores reality of what circular economies do. In their make-believe world, people are all paying each other for coffees and papuskas or whatever, which is not happening. To be clear, that is not happening. There is a handful of hobbyists doing a handful of payments. If you go contact these merchants and you ask them how many times do people pay for things in Bitcoin, it's like once a week. So, and the reason why is that using Bitcoin as a payment method does not solve a problem. It's not faster, cheaper, or easier. And also, why wouldn't I just use a stable coin? Right? Because now I have volatility. What they were missing is that there was going to be a circular economy on Bitcoin, but it wasn't going to be physical. It was going to be digital, as in a digital economy of stables, other types of tokens, governance tokens, which resemble, kind of other types of traditional asset types like equity potentially. If you look at that, we saw this emergent digital economy spawn on top of Ethereum and Solana. And with Ordinals, we've seen a glimmer of it. And the glimmer, I think, that little glimmer, even in the middle of a bear market, is very, very bullish long term. I mean, Bitcoin NFT trading volume surpassed Ethereum some days. That's after 1 year, shitty wallet support in a bear market. So, that digital circular economy on top of Bitcoin drives the store of value thesis. It also protects the Bitcoin's long-term game theoretic security model through more transaction fees, we need more transaction fees to replace the subsidy over time. So for me, I think they're kind of missing the one of the biggest narratives ever in Bitcoin.
It's definitely something happening. That's like that famous song, right? Let's move on. This is super interesting. We could go on and on about the Bitcoin development L2, how it's going to be used. I think you have a very interesting and pretty bold thesis on this. I wanted to ask you about sort of another version of this narrative. I mean, it's obviously related. The institutions getting interested in Bitcoin. You talked about BlackRock now championing the Bitcoin narrative, and they are, and it's the largest asset manager in the world. Obviously, Fidelity, like the third largest, or whatever they are, has been championing. I don't know why I can't say this word. They've been advocating for Bitcoin.
Yeah.
Is there a risk to that? I mean, I was getting asked this so much around the Bitcoin ETF launches by Bitcoiners, by journalists, whomever, like, wait a second, like friends of ours that are semi-critics, like Joe Weisenthal's, like trying to dunk on us for liking the fact that institutions are doing ETFs.
I always love to pull up a 2013, 2014 Joe Weisenthal to remind him of where he sits in the thought leadership category.
Do you think that is there some kind of risk to underlying Bitcoin for all these institutions getting involved? Does it somehow like counteract the core thesis of Bitcoin?
Yeah, there's been a lot of angst around this where people are like, we've sold out, or Bitcoin's been captured by the institutions. No, this is what winning looks like. I mean, how is Bitcoin going to be a global money if no banks ever touched it? I find that completely absurd. And so most of the trolls I see are TradFi folks or like really shitty shitcoiners from like, Bitcoin Cash, where they're just kind of angsty and angry and they're like trying to throw barbs at Bitcoin. Same with the privacy coin folks. It's like privacy coin folks, Bcash, and like no coiners, where they're like, oh, look, Bitcoin's been captured. It's dead. No, I mean, we're seeing BlackRock bend the knee where Larry fucking Fink is shilling Bitcoin on CNBC. I mean, that's crazy. I waited a decade to see this happen, and it's incredible. The amount of demand he'll drive, the amount of trillions in retirement accounts that will go into Bitcoin because of this is phenomenal. Bitcoin's code didn't change. There wasn't a BlackRock line that was added. There wasn't a BlackRock influenced soft fork added. Bitcoin just stayed the same, and they bent the knee. And so I think this is one of the greatest. This is what hyper Bitcoinization looks like. It's insane to see it happen. I mean, I thought it was actually going to take longer. It just seemed like it was never going to happen. So that's really cool to see. I mean, we're seeing on the political side too, it becoming a topic of the election, the U.S. election, presidential election, and I think it should be. At least they're fucking talking about us. Like before, we were just the weird kids.
Yeah, we didn't matter at all.
Yeah.
Even from Kamala Harris and Tim Walz's campaign, although listeners to this show or readers of my content will know I've been very critical of the idea that somehow the Harris campaign has shown daylight between their position and Biden's position. I think it's basically identical to Biden's position. But they were even forced to make a public comment about it, which is actually a lot, to be honest. That was positive.
They've heard of us.
They were forced. Yeah. Now, Brian Nelson, this former Treasury official who made this comment and advised the Harris campaign, he referred to us as that sort of industry, meaning like, we'll support innovation. It was a direct question about crypto, though. So, I mean, they didn't even say crypto, Bitcoin, blockchain, anything like that, but still they had to comment on it, which... And of course, Trump on the other side gave a 49-minute speech about it. So like we know he likes it, but
yes, and I think this election is really coming down to free markets versus communism. Like it's kind of scary. Like the things that Kamala Harris is throwing out around taxing unrealized capital gains, which by the way is not done anywhere else in the world other than fucking Norway or something. And they had a huge capital flight after that happened. This showdown for crypto, overall it's like free markets versus communism. And then if you dig in deeper, in crypto, this is, I think, a pretty important election for crypto as a whole. I believe the CFTC went after Uniswap yesterday. Was that today or yesterday?
Yeah, that was this week, and that's actually kind of an interesting one as well, which is really about their front end.
Yeah.
It's not really about the actual smart contracts. The threat, the deepest threat to crypto from governments is regulating unhosted wallets, self-custody, or immutable code in the core. And it's really just the U.S. Treasury Department that has been advocating for stuff like this. The market regulators and stuff, like they're all around like the, are you a broker? Are you doing tax stuff? It's not the word. I mean, is it a security? Is it a commodity? Yeah. That stuff's not great. And a lot of the, I think, approaches have been bad. But the real core fights are it's Elizabeth Warren. It's the Digital Asset Anti-Money Laundering Act, which seeks to regulate software developers and smart contract code and miners and validators as like Bank Secrecy Act reporting companies.
Yeah, which is absurd.
And not possible. Yeah.
Not possible.
I don't think Harris is actually going to be meaningfully different on crypto than Biden. And let's face it, we had back-to-back bull runs for Bitcoin under Biden's administration. Has it really been that? I mean, obviously it's been terrible.
Warren and Gensler have been pretty bad.
They have, but they haven't succeeded in killing us or anything.
I mean, they're going after literally every single actor in the space.
It's fair. I mean, it has been bad, to be clear.
They're literally persecuting every single.
It's been very bad.
They just don't have the resource to persecute all of them. Otherwise, they would.
Yeah.
So
and he is always going back, the chair of the SEC, to ask for even more funding for enforcement.
Yeah, I mean, this is that classic like late stage, crony capitalism, where capitalism has been perverted by this massive bloated government, where we have all of these three-letter agencies that are dictating every part of our life over what we eat, drink, buy, sell, read in news. It's quite oppressive. Yeah. Like that level of oppression, people don't realize that occurs until you go out and start a business. And then you're like, wait a second, why is this regulation there? And some of them are well-intentioned, but most of them are just completely just bureaucratic and BS. I always like to go back to the FAA. Okay, let's say the FAA doesn't exist. So people are going to voluntarily get onto airplanes they think will crash. No, they won't. Insurance companies won't underwrite the airplanes for them to fly if they're risky. There's a check and balance of the market being like, I don't want to die. And
so I don't want to fly. It even rhymes.
Yeah, I don't want to die. I don't want to fly.
Right.
I'm not the rapper here.
No, you're right, right? I mean, it's not, you're totally right. I mean, it's like there was a great a meme I saw today of somebody who was driving from Chile into Argentina, and it was like, the road in Chile was privately built and it's in perfect condition. And as soon as they cross into Argentina, it's literally pothole central.
Yeah, there's no incentive for government actors to act in a profit-seeking or efficient manner, which profit means efficiency.
In fact, it's almost the opposite, right?
Yeah, they want to spend as much as they can.
Correct, because otherwise the budget will get cut, right? Yeah. So they take longer. I mean, there's this section of road, I don't want to say exactly where because I don't want to dox any two location, but an American interstate that has been under construction for 25 years. And it's not clear what they're doing. I've driven across it many times.
Talking the Van Ness route in San Francisco?
I don't want to say it, but yes, it's probably many of them.
Yeah, Van Ness. I used to live on Van Ness in San Francisco. I mean, Van Ness was the north-south highway.
Yeah.
I think there was some bus lane project that took almost a decade. I spent almost 10 years there, and like from the time I lived there to the end, it was basically a nonstop construction project.
All right, before we wrap, this has been a great rip, by the way. Thank you for coming back.
Yeah,
one last thing. Volatility in Bitcoin. Every time this happens, happened in August, there was a big global day of this collapse of the Japanese yen carry trade that disrupted all markets, including Bitcoin. Bitcoin dropped from like 60 plus to 49K briefly before recovering basically, and now we're still chopping. But all the old characters came out of the woodwork. They said, like Paul Krugman, I think he was even out doing his thing on Bitcoin.
Classic.
Oh, how can it be a store of value if it went down, right? Like, what's your take on this? You've been watching these people documenting,
I mean,
for a decade, more than
I'm getting old, Alex, man. This is wearing on me. The amount of stupid, all the fun. I mean, it's actually led my, outside of crypto. Like I bought a bunch of SpaceX because I spent about a year and a half reading into it. Basically, when I see FUD, a lot of FUD, and when you dig in, it's just totally fabricated bullshit, that makes me incredibly bullish on something. So, but it's a little tiring in crypto after being in the space for such a long time.
Yeah.
So the one about volatility is a classic question. Well, it's not money. It's too volatile. Two counters to this. If you look at a chart of gold over the last century, very choppy. There's not a nice linear line. It's all over the place. The other is a first principles thinking of, okay, if the price is stable, this is more of like an entropy question. Like there has to be an externalized heat or externalized volatility injected somewhere else. You can't dampen volatility in a certain region unless you take like heat out, or unless you take away some of the volatility and pull it out. So yes, the dollar is stable. It's stably declining.
It's the money supply of the dollar that is not stable, right?
To have a subjectively stable purchasing power, you have to have complete control over it, and it have to be completely centralized, and it also externalizes the volatility elsewhere. That's what I'm trying to say with that. It externalizes the volatility. You can't suppress volatility forever. A peg has never been maintained perpetually. And so Bitcoin, because it's decentralized, will never have a stable price. Maybe in its very decades from now when it's mature, it might trade like gold where it's barely up a point every day. But the entire purpose of a store of value asset is to not be centrally controlled. That's why gold and Bitcoin are the best store of value assets out there. If the price was stable, that means it would have to be centrally controlled. So volatility is a feature, not a bug. It's a representation of its decentralization rather than a problem.
Very well said. Dan, thank you so much for coming on Galaxy Brands. Dan Held, general partner at Asymmetrics Bitcoin DeFi Venture Fund. Dan, thank you so much.
Thanks for having me.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Dan Held from Asymmetrics Bitcoin DeFi Venture Fund and our friend Bimnet Abibi from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.